Guys, this is S&P 500 weekly technical analysis for the week of March 24th. After coming down heavily, there was supposed to be a V-shaped recovery. And this recovery was not limited to the S&P 500 but can also be seen in the Dow Jones. And this V-shaped recovery was supposed to be up to 5827. That was the 50% of the Fibonacci retracement level. However, for now we have seen that the S&P 500 was struggling to clear the initial zone and there were two consecutive rejections from the zone. This is why a recovery to 5827 might not happen. Because now whether the S&P 500 will be able to move up to 5827 or not, it will be defined by the zone that starts from 571x. Now yesterday the S&P 500, Dow Jones and Nasdaq, all of these three indices were supposed to come into an absolute bullish condition wherein on Monday we would have anticipated a gap up open, or irrespective of any open, a good or heavy bullish movement. However, in last 10 or 15 minutes, the market moved up further and failed to give this strong bullish condition. That is why now there is no confirmation, no guarantee that there will be a gap up open on Monday. Number two, there is no guarantee that the S&P 500 will be able to move to 5827, which is the 50% of the Fib retracement level. And even if it tests the 571x, then also there is no guarantee that the S&P 500 will be able to move to 5827. Because we have seen two consecutive rejections on Wednesday and Thursday at the same zone. Now what exactly is going to happen on Monday? And then for the rest of the week, how it is going to behave or to react at the zone, what will happen if it clears the bullish side, to what will be the maximum level it can achieve, and if it fails, then where it will be coming down, what will happen here in the bearish trend. I am going to discuss each and everything in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now, before I discuss the agenda of this S&P 500 weekly technical analysis, let me give you a quick recap of what I predicted to happen in the S&P 500 in the recent week and what actually was seen in the market, or how accurate were the predictions. So Monday there was a good bullish candle, and this bullish candle was supposed to be seen. Why? But here the most important part is that on Monday when the S&P 500 moved up after open, it sustained at 564x strong support. And in my midday update on March 17th on Monday, I mentioned here that the most important part of the movement in the SP500 is that the SP500 is holding above 564x. So on Monday, S&P 500 moved up and made a high at 5704 approximately, whereas I was anticipating 5073 only. Okay, it moved up to 5704. That is fine, perfectly fine. On Tuesday, surprisingly, there came a good gap down open, and this gap down open was very heavy because the S&P 500 traded in the open equal to high condition. So again, in the midday update on Tuesday, I mentioned that the bullish movement will remain limited and restricted to the open price. That's it. And the bearish side will be open to 558x. Then came Wednesday. Now Wednesday was the mega event, FOMC event. Or even if everything goes well and comes in favor of the stock market, then also S&P 500, the bullish side will remain limited to 571x, the zone. So even when the SEPs came in favor of the stock market, okay, and the FOMC decision was also in favor of the stock market, then also I mentioned that if all goes well, then the SP500 will test the zone that starts from 571x. Then on Thursday, S&P 500 opened around 564x, and immediately after open, it was very much clear that if it sustains within the first hour or within first 30 minutes, then it will remain bullish for the entire day, irrespective of anything. That is why in my midday update on March 20th, Thursday, I mentioned S&P 500 gained heavily in the first hour, moved up to the strong zone, but just like yesterday on Wednesday, it failed at the zone as it was supposed to. Okay, this is what we knew, that it will fail at the zone. Now, because there was a very special condition on Wednesday and Thursday, that is why on Friday, yesterday, okay, that was weekly, monthly and quarterly expiry, and approx $2 trillion worth options were set to expire. But what we knew is that even if there comes a gap down open, then also S&P 500 will move up. Move up to what? Move up to its previous close, that was 5663. Similarly, the Dow Jones will also move up to its previous close, that was 41953. Similarly, the Nasdaq will move up to its previous close. That is why on March 21st, yesterday on Friday, I mentioned in my pre-market update before the open of the stock market, okay, then again in the comments, then again in the midday update, that this means now the bullish side, the market, S&P 500, Dow Jones and Nasdaq is going to test their respective yesterday's closing. So it was like 100% confirmed that this will happen no matter what. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, entire US stock market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now on the weekly chart, S&P 500 managed to sustain in a manner that for more bearish movement to happen, the second leg of the bearish cycle, S&P 500 will show reluctance. It will show reluctance because it has technical reasons to do so. Okay, but still on the weekly chart, S&P 500 will be seen 50% or 60% bearish. Now the second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, as of now, through the numbers, we can see that it is struggling. There were consecutive rejections, but the only thing that is in favor of the bulls is the bullish crossover in the MACD, which was seen yesterday. This means that Monday and Tuesday will be very crucial for the stock market, for the S&P 500, because if maximum by Tuesday, if the S&P 500 fails to clear, sustain and close above the zone, what zone? The same zone that starts from 571x. If it fails to clear, sustain and close above the zone, in that case even the MACD won't be able to help. It will have to come into the second leg of the bearish cycle. Now the third and the last point of the agenda is the probable movement of the SP500 from March 24th, which is Monday, through March 28th, that will be Friday. What is going to happen? What will be the conditions for the bullish movement? What will be the conditions for the bearish movement? What will trigger bullish or bearish movement, or if there will be consolidation, okay, the zone, levels and everything. I will discuss that in this, the last point of the agenda. And guys, once again, let me remind you that all of these three sections, 1, 2 and 3 sections, are interrelated, are interconnected. This is why when I say the probable movement, this means that by the time I discuss the third point of the agenda, probable movement, I have already discussed 30% to 40% of the probable movement in the first and the second point of the agenda, because I discussed the candles, the patterns, the technicals, okay, in the first and the second. This is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the entire US stock market and not just in the S&P 500 in the coming week, in the next week. Now guys, I'm going to discuss the first point of the agenda here, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week only. Now here on this, the weekly chart of the S&P 500, you will notice 1, 2, 3, 4. 4 bearish candles, 4 red candles. And then the formation of this a small green candle. Okay, what does this indicate? This the last green candle. Okay, as such this candle is very light, very small, not light, very small. This candle is very small in a manner that the closing price of the candle is below the open price of the previous candle, and the body of the candle is very small as compared to the bodies of the previous candles. Okay, so this means that no bullishness, absolutely no bullishness can be seen through or can be construed or can be considered through this the candle. Does this mean that the bearish movement will continue, that the fall will continue? Not exactly. Why? Because if you notice the closing of these two candles back to back, this is the red candle, okay, for the week of March 10th, then this is the green candle for the week of March 17th. The closing of these two candles back to back is above the moving average. This is the only bullish factor. This is the only bullish factor, otherwise there is nothing bullish. So what does this mean? This means that the market, the S&P 500, okay, and the similar condition is seen in the Dow Jones and also in the Nasdaq, okay. So in all of the indices the similar condition is there. This means that the market will get a little more bullish support, okay, and in the best case scenario it can try for the same 5827, which is the 50% of the fib retracement. Fib retracement, when you draw the fib retracement from the high to the low here, okay, then 50% is 5827 or 5826, okay. So that will be the best case scenario, because when it reaches to the 5827, okay, or this the 50% of the fib retracement, then the moving averages are there, okay. Also on the daily chart and the lower level charts, moving averages are very heavy. This means a movement beyond 5827 as of now, even in the best case, is not anticipated, not expected, okay. What does this mean? This means that considering the best case scenario, when it moves up it will fail and it will come down, okay. First leg move up, okay, the staircase pattern, okay, the stairs, simple. So earlier market wall was ascending in this manner, and now it will be descending in this manner, okay. And as I mentioned earlier also, that market has now entered into the correction and also in the recession, okay. So the cycle has already begun. Now this is the normal behavior, because see, let me show you once again here. Now if you see here, okay, back to back 4 candles, 1 2 3 4, back to back 5 6 or 7 red candles, so it is something that is technically not allowed. Technically it cannot happen, because by the time it came down here, or in the week of March 10th, it already hit the saturation levels in the bearish side, okay. So technically it was not allowed to come down anymore. So intra week it has retraced, and it was not because of the S&P 500, it was because of the Dow Jones. Dow Jones was responsible for this, the bullish retrace intra week in the week of March 10th and then the previous week, okay. That is why that the cycle correction and the recession cycle has already begun. Market has already entered. It is now descending, okay, in this manner, in this fashion, okay. It will come down. Now it is clear, okay. One more thing that I want to show you here, these moving averages are about to give a crossover, a bearish crossover. Whenever there comes a bearish crossover here in this case, then this changes the trend. So as of now, still the trend is bullish. Although market has come down heavily, okay, everything looks red, bearish, but still the trend, long-term trend is bullish. For the long-term trend to change to bearish, these moving averages must give, these three moving averages must give a bearish crossover, perfect bearish crossover. Okay, when that happens, then there will not be any more bullish movement. Whatever bullish movement will be there, it will be limited, restricted, and eventually it will come down, then retrace, then come down, then retrace, then come down. Okay, that is why I mentioned a correction cycle or the recession cycle has already begun. Now just to give you an idea, the last time we have seen, okay, this kind of scenario here, means the crossover, it was yes. So last time I was wrong that it was actually October 2023. It was not October 2023. It was back in January 2023. So it's been more than 2 years. Okay. So in last 2 years, 2 years and 3 months. This is the month of March. Yep. So 2 years and 3 months. Okay. Or it's been 27 months. Okay, we have not seen this the crossover. Okay, so now when there comes a crossover, then without any doubt, okay, correction is not there as of now. It is a recession. Okay, cycle is already there. So this is through the candle of the S&P 500, and now let's analyze the candle of the Dow Jones. In the similar manner, okay, a bullish candle failed to close above the closing of the previous candle, but closed above the above the moving average. Okay, so again, similar to the S&P 500, it is still under pressure, it is still bearish. Okay, but the bullishness is through the moving average only, and that's it and nothing else, right? And there is no need to discuss the Nasdaq, because Nasdaq is already in the same condition, and Nasdaq is the one which is going to suffer the most, means there will be heavy fall in the Nasdaq in the coming weeks, months. Okay, because in the recession cycle 50% is the standard mark. 50% means the high was 6147, so it will be 3075 or 3000 in simple words. Okay, that will be there. Now let's analyze the technicals, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day, okay, from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, pre-market analysis before the open of the stock market, midday update after 3 hours, final update 1 or 2 hours before the closing of the stock market. So if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now in terms of the technicals, moving averages still holding, okay, and the closing is below the moving averages or within the cluster of the moving averages. So S&P 500 is neutral through the moving averages. S&P 500 is bearish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. On the weekly chart, okay, MACD. S&P 500 is bearish through the MACD. S&P 500 is bearish through the stochastic RSI on the weekly chart, and S&P 500 is neither saturated nor not oversold. Okay, these are conditions are not there. Now the S&P 500 or the market movers, okay, they have made a mistake by giving a green candle, because by giving a green candle opens more room in the bearish side. If there would have been a red candle, then from the next week onwards there would have been a good or a heavy bullish retrace. Okay, and then certainly, okay, with confidence I would have confirmed 100% that it will move up to hit the 5827 or even a little beyond. So in this manner the S&P 500 will be seen or considered as the weekly chart, it will be seen as 60% bearish. 60% bearish. However, this 60% bearishness does not mean that the trend has changed. No. For the trend has to change, there must come crossover in the moving averages. That is a primary condition for the trend to change. Last crossover was seen in January 2023, and since then it's been 27 months and market was absolute bullish, heavily bullish, the global stock markets. And now we all are waiting for this the bearish crossover so that it can formally enter into the recession. Okay, but guys, once again, recession does not mean that you should fear that. No, you need not to fear when you hear or when you see the word recession, because recession is the best time to make money. Okay, I'm not talking about the economy or the job, okay, or the businesses. I'm talking about the stock market, because during the recession only there will be a very heavy red candles, and through these red candles you can make a lot of money. Now comes the Dow Jones. Dow Jones, okay, almost a similar condition. Dow Jones is bearish through the Bollinger Bands. Dow Jones is bullish through the Ichimoku cloud. Dow Jones is neutral through the moving averages. Dow Jones is bearish through the MACD. Dow Jones is bearish through the stochastic RSI. Okay, neither saturated nor oversold. The divergence in the Dow Jones is okay. It is not that heavy as compared to the S&P 500. Dow Jones will also be considered as 60% bearish on the weekly chart. Okay, but still the long-term trend is still bullish. Okay, let me tell you this very important thing. This can actually change the entire scenario, complete scenario. It can change. Okay, and what will that be? If there comes a bullish slip, okay, what does the bullish slip mean? The bullish slip means that rather than giving a bearish crossover, when the moving averages were supposed to give a bearish crossover, something happened. There came a heavy bullish candle, one or two, and rather than giving a crossover, the one moving average slipped on the other. Okay, let me show you, okay, this thing in action so that you can understand what I'm trying to say. Okay, this is what it is. Okay, back in October 2023, that was the time when the market was about to give a crossover in the moving averages, and this is the S&P 500. Okay, you can clearly see here. Let me zoom in. Okay, now you can clearly see here, see this thing here. Okay, that the red moving average and the green moving average, rather than giving a confirmed bearish crossover, moving averages slipped. Okay, and the pattern did not change. That was supposed to be above the green moving average, and it was there. The red never crossed under the green, or the green never crossed over the red. Okay, so what was the implication? Then what we have seen? Okay, now you can clearly see that after such kind of scenario, what we have seen, very heavy bullish movement. From here you can see 25%, 30% bullish side movement. Okay, so if such a scenario happens, I do not know what will be the reason or what can actually trigger, okay, this kind of scenario, because earlier it was very different. Okay, that it was slowly coming down. Means you can look into there are 4 red candles, and earlier there were only 2 red candles. Okay, then some event happened that time. Okay, so this means that but this will be very much clear in the month of April, because March is about to be over. In the month of April, I think by 15th of April it will be quite clear whether there will be a crossover, okay, the moving averages, or if there will be a slip. If there comes a slip, in that case S&P 500 will be looking for 7,000. Okay, in the straight line, it will be moving towards 7,000. Then there will not be any recession, no correction, nothing at all. Okay, but again, this time it is very different, because if you are subscribed to my YouTube channel for last many months or years, then in the recent month, in the October 2024, I mentioned that 614x will be the peak of the season. It will be the high, all-time high or the peak of the season in October 2024. Okay, and then again and again repeatedly from October 2004, I mentioned that whenever it moves up, test the zone which is there, which starts from 614x, then that will be the peak, that will be the all-time high. Okay, and we have seen that when it hit the all-time high, the S&P 500, then the all-time high was 6147, and since then it is coming down. Okay, but last time back in October 2023, when the slip was seen, this slip, that time the peak was not anticipated, but this time the peak was anticipated. So this time it is very much different. So now we are waiting for this, the crossover. Once the crossover is confirmed, then confirmed correction is already there, recession is already entered, then recession will be 100% confirmed. Okay. Now the same, yes, exactly the same is in the Dow Jones and the same is in the Nasdaq. All of the indices, S&P 500, Dow Jones and Nasdaq. Okay, in exactly in the same manner, in the same pattern. However, guys, whether it will be a correction or a recession, you need not to worry about these things, because through these updates, okay, every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, I give these daily precise updates of the S&P 500, Dow Jones, okay, and in a manner to the entire US stock market, okay, and I tell my Patreon community members what is happening, okay, what will happen in the next hour or in the next 3 hours or for the entire day. Okay, so I give the pre-market analysis 1 or 2 hours before the open of the stock market, and in the pre-market analysis everything is quite clear. Okay, what will trigger bullish movement, what will trigger bearish movement intraday, levels, zone, everything. Then I give the midday update is given after 3 hours, and then it confirms what is going to happen in the rest of the session for 3.5 hours or so. Okay, how the market is going to behave, how the market is going to trade, okay, along with the numbers, levels, zones, everything. And then I give the final update is given 1 or 2 hours before the closing of the stock market, and through the final update I tell my community members, my Patreon community members, that if the S&P 500 closes in this particular manner, then tomorrow, means the next day, there will be a gap up open or a gap down open, or it will continue its bullish movement or bearish movement, or it will remain neutral. And guys, it is not just about these daily precise updates of the S&P 500 and the Dow Jones, but I also give the stock market opportunities in the premium stocks, in the top 30-40 companies of the US stock market, the blue chips. Okay, minimum 5 to 10 opportunities every week. And that's not all, because I also give the mid-week update. The mid-week update is a video technical analysis which I give to my Patreon community members every Wednesday or Thursday. And here in this video technical analysis, I tell them the levels, the numbers, movement, okay, that in this manner it will move up, then it will come down, or it will come down to sustain, and then again it will move up. These are the conditions, everything along with the precise numbers, levels, and everything. So guys, if you also want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see the option, the button See Membership Options. And when you click on this button, the See Membership Options, then the memberships will be displayed here. And there are these 3 levels, level 1, level 2, and level 3, or these 3 tiers, tier 1, tier 2, tier 3. These 2 levels or these 2 tiers are same. The only difference is the geographical location. Otherwise, these all are same. Now, when you subscribe to either of these, then you will be getting all midweek update videos, okay, which I publish every Wednesday or Thursday. Then the daily SP500 analysis, updates, movement, levels, zones, and the stock market opportunities minimum 5 to 10 every week. And this the third tier, or this level 3 or tier 3. It is very unique in a manner that whatever you are going to get here, you will get by default here in the level 3, in the tier 3. Okay, along with these, I will also give you one Zoom meeting, one Zoom video meeting, video session, okay, and this will be one-on-one only. It will be just me and you, no one else, and it will be there for 2 or 3 hours. Now what I'm going to discuss in the Zoom meeting, I will give you entry and exit secrets: when to enter, when to exit, when to maximize your profits, when to minimize your losses, or how to minimize your losses. Okay, what is the right time to enter or exit? Then one premium hack. This hack works almost 100% of the times with almost 100% accuracy. So I will give you one premium hack, then I will give you one trading or options strategy, okay, every month. So again, this strategy works almost 100% of the times with almost 100% accuracy, okay. Then the modified technical indicators. Now my modified technical indicators predict the movement or predict the change even before it is seen. Then the options premium calculator. Okay, then I will, because I know that more than 95 or 97% of the traders, they do not know how to calculate the premium value of any option. They cannot predict the future value. However, here I will give you the options premium calculator. So in this manner, this level 3 or this tier 3 is very much informative, because you will be getting the daily precise updates and everything, along with tons of information that will help you become self-reliant. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday. Pre-market analysis, midday update, final update, stock market opportunities, midweek update, everything. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda, technical analysis of the S&P 500 on the daily chart. Okay. So this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay. Now let's first analyze the candle. Okay. Now, like the weekly candle, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now this is the last candle. This last candle is a good bullish candle, and also this last candle has closed above the closing of the previous candle. What does this indicate? This indicates bullishness or bullish sentiments. But these bullish sentiments or bullishness is not heavy. It is not heavy. Okay, why it is not heavy? Because prior to this candle, prior to the formation of this candle, okay, on Wednesday and Thursday, we have seen two consecutive rejections from the zone. Okay, consecutive rejections. And then yesterday, okay, this candle formed in a manner which is supporting the bullishness, the bullish movement, but it is not heavy. Not heavy in a manner that the S&P 500 will still struggle. It will still struggle to clear the zone. It will struggle to clear the zone. This is what you need to understand. Okay, bullishness is there, bullish sentiments are there, but it will still struggle to clear the zone. However, if the S&P 500, Dow Jones, Nasdaq would have closed in this particular fashion, okay, which I mentioned in my final update yesterday to my Patreon community members, then 100% with confirmation that on Monday S&P 500 would have breached and highly likely would have recovered and closed above the zone which starts from 571x, and then in the rest of the week it would have tested the 5827, which is the 50% of the Fibonacci retracement level. However, the S&P 500 failed, and the Dow Jones failed, and the Nasdaq failed to close in this particular manner. And all of this has happened in last 10-15 minutes only. So through this candle, now it is clear S&P 500 will try to move up. Definitely it will try to move up, but it will still struggle at the zone, and then the zone will decide. Zone will decide means there comes a closing above the zone. Okay, but now because there were two consecutive rejections, so we need two consecutive closings above the zone. Once that happens, then it will be moving to 5827, which is the 50% of the Fibonacci retracement level. However, it will be able to breach the 5827. Why? Because above 5827 there is my calculated heavy zone, very heavy zone in 58xx. It will be moving up to the zone, will test the zone and will fail, at the zone and will come down. Okay. However, if there comes no two consecutive closings above is the zone, which starts from 571x, in that case it will have to come down. Continuation of this, the fall, little retrace, fall. Okay, very simple. Now let's analyze the daily candle of the Dow Jones. The same problem, exactly the same problem that I mentioned in the final update yesterday to my Patreon community members. Okay, means candle is good. Okay, it is heavily bullish intraday. We have seen heavy retrace. Okay, I think it was more than 1%, 1.25, 1.3%. Okay, so it is heavily bullishness. The bullishness is there, just like the S&P 500, but again the same problem. It is not in a condition wherein there I can say with 100% confirmation, or I can give 100% guarantee, okay, that it will be able to move up. Because if you have subscribed to my YouTube channel for last many months or years, or especially if you are my Patreon community members, then oftentimes, okay, I mentioned that with 100% certainty this will happen, and that happens. And once again, okay, it is not magic and I'm not a magician. Okay, I am simply a technical analyst. Okay, and I consider the patterns, the technical indicators, okay, these things, and when everything aligns in a proper manner, okay, then I give 100% confirmation guarantee, okay, that this will happen, means this will happen no matter what. Okay, and one of the example is that yesterday, okay, I mentioned to my Patreon community members that no matter what, all of the indices, S&P 500, Dow Jones and Nasdaq will move up. Will move up to what? Will move up to at least to their previous closings on Thursday. S&P 500 will move up to 5663. Okay, Dow Jones will move up to its previous closing. Nasdaq will move up to its previous closing. Okay, so that was 100% confirmed, 100% certain that this will happen, and it happened. Okay, so this was through the candle that we have seen. Now let's talk about the technicals. In terms of the technicals, S&P 500 is bearish through the Ichimoku cloud on the daily chart. S&P 500 is bearish through the moving averages on the daily chart. S&P 500 is bearish through the Bollinger Bands on the daily chart. S&P 500 is bullish. Okay, I think in my comment around 1 p.m. Eastern time, or somewhere around, or in the midday update, okay, to my Patreon community members, I mentioned that if the S&P 500 remains above 564x or closes above 564x, then there will be a confirmed crossover, means then the MACD will give a bullish crossover, will get a bullish crossover. Okay, now this is there, and this is a relief. This is a relief in a manner that even though the candles, through the candles, okay, market, the S&P 500 is going to struggle at the zone which starts from 571x, but with the help of this special pattern, this special combination, because MACD is bullish, and the stochastic RSI is bullish on this the daily chart. Okay, this the S&P 500, this combination will bring bullish momentum, Okay, now this bullish momentum will help the market. If all goes well, then S&P 500 might recover the zone. Once it recovers the zone, then fine, then everything is good and well. Then 5827, not 5827 actually, my zone which is above 5827, okay, that will be there. So through all of these are technicals. Now that the MACD is bullish and stochastic RSI is bullish, S&P 500 will be seen as 70% bearish on the daily chart. Okay, now the Dow Jones is also the same. Dow Jones is bearish through the Ichimoku cloud on the daily chart. Dow Jones is bearish through the moving averages on the daily chart. Dow Jones is bearish through the Bollinger Bands on the daily chart. Dow Jones is also bullish, again the same, see the bullish crossover. Yesterday whatever happened in all of the indices, Nasdaq, then Dow Jones, and then SP 500. Okay, everything. Okay, in the similar manner in all of the indices. MACD Dow Jones, the MACD of the Dow Jones is bullish on the daily chart. Okay, Dow Jones is bullish through the stochastic RSI on the daily chart. So in the similar manner, Dow Jones is also 70% bearish on the daily chart. However, you must understand and you must remember, on the daily chart or through the daily chart, the trend is absolute bearish, no change in the trend. Okay, and it is expected to remain in this manner. So what does this mean? 70% bearish, okay, and 60% bearish on the weekly chart. This means that even if the market try to move up or it moves up actually, then also there is no guarantee that it will continue its bullish movement, but there are very heavy chances, very heavy probability that it will eventually give up. It will have to align, to its trend. Trend is bearish on the daily chart. Okay, the bearish momentum, everything is bearish. This is just a normal bullish retrace, and this is the natural movement of the market. Okay, this natural movement you will see in all of the indices, in all of the stocks. This is the natural movement after coming down heavily, then there comes some bullish retrace and then it comes down again. Okay, the second leg of the bearish cycle. Now, before I proceed further, let me share this very important information with you, that this is my SP 500 knowledge transfer program. Okay, so when I mention the correction or the recession, okay, absolutely no need to fear, at all. Okay, because this is the best time, the correction or the recession is the best time to make money. And how can you overcome the fear? You can overcome the fear by knowing the movement of the market, the levels, the numbers, everything. This is the SP 500 knowledge transfer program. Through this program, I teach everything, whatever I know. Okay, the movement from basics to advanced, everything. Okay, the stock market, the behavior of the stock market, all of the modified technical indicators I will share. I will share all of the trading strategies that I mentioned here. Then the options, from the basics to the advanced, the options trading strategies, okay, the calculated support and resistance levels. Then how to predict the movement, for example, that this will be the peak, this will be the high, and then it will be coming down, this will be the low, and then it will be moving up. How to predict these movement, okay, with such an accuracy. Okay, so just like recently I mentioned that 614x will be the all-time high of the S&P 500, will be the high of the season, and then it will come down, and you have seen it by yourself. Then it was the all-time high and it came down. Then how to deduce the trend, how to know the limits, how to deduce the trend, okay, how to avoid getting into a trap, okay, all of these things. Then how to recognize the manipulation, and much more, and the hacks, okay, the short-term hacks, intraday hacks, the long-term hacks, everything. And this is my email address, okay, that is mentioned in this Google spreadsheet. And these are the important terms and conditions, very, very simple terms and conditions. And then these are the snapshots of the meetings. So guys, if you are looking for a long-term sustained solution, you want to become self-reliant and want to trade, okay, for the years to come, and you want to trade with confidence without worrying about correction, recession, or the bull market or the bearish market, okay, then you should learn how the market works. Then you should know the secrets of the market and everything about the market. So guys, this is my email address, okay, and I have given the link to this spreadsheet in the description of the video and also in the comment section. And also guys, I'm offering some discount, okay, on all of these three levels, level 1, level 2, and level 3. This discount is valid until 25th of March 2025, which means Tuesday. But guys, if you are looking for the short-term solution, then you can learn the hex. Okay, hex works with almost 100% accuracy, 100%, almost 100% of the time. Similarly, the trading strategies works with almost 100% accuracy with 100%, almost 100% of the times. The premium calculator and everything. On my Patreon page, you will find these programs in the shop section. And I've given the link to my Patreon profile in the description of the video and also in the comment section. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner to the entire US stock market. Now, in the next week, but guys, before that, so far if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these daily precise updates of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire market, the entire US stock market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. The next week, only Friday. Friday will be very important and Friday will be very critical because on Friday the inflation data, PCE data and core PCE data will be released. Okay. Before that, on Wednesday, on Tuesday, Wednesday, Thursday, so GDP data and then goods orders data, then consumer sentiments data will be released. So market will remain a very little volatile, not much, very little volatile on Tuesday, Wednesday, Thursday. However, Friday, okay, it will be the major event. Okay, the major, this the big data, PCE and core PCE data. This means that if the S&P 500 and the entire market manages to sustain until Friday, until Thursday, and then on Friday there comes this the adverse data or bad economic data. In that case, whatever high will be there by that time, by Thursday, then that will be the high. This is the bullish retrace, and then it will come down. Okay. Now let's discuss the numbers movement. Okay, this thing. What we know is that now the zone which starts from 571x, only when there comes two consecutive closings above this zone, the S&P 500 will be eligible for the 5827, which is the 50% of the Fibonacci retracement level. So you yourself can use the Fibonacci retracement from February 19th, which was the all-time high, to March 13th, that was the low. Okay, so this 571x, the zone which starts from 571x, will be very critical and will be very decisive. Okay, so there is nothing much in the bullish side as such. Okay, because once it clears the zone, two consecutive closing comes above the zone, then 5827, 50% of the Fib retracement level, and after that 5827, there comes my very strong zone, not level but a zone, and then it will move up to the zone, it will fail at the zone, and then will be coming down. So bullish side is very simple. There is nothing much in the bullish side. Okay, in this manner it will complete its bullish retrace. Okay. Now the problem is in the neutral movement and in the bearish movement. Okay, what is this, the neutral or the bearish movement? So what you need to understand is that the MACD and the stochastic RSI in the S&P 500 and in the Dow Jones and in the Nasdaq, in all of the indices, MACD and the stochastic RSI both are bullish. This means that there is bullish momentum. Okay, this bullish, otherwise the candles are not supporting that much bullish movement, but only this special condition is supporting the bullish momentum. So this bullish momentum, the S&P 500, Dow Jones, Nasdaq can try to move up, and in the S&P 500 the condition of the zone which starts from 571x. Okay, so this is what we know. Only this bullish momentum can help. However, even means if the S&P 500 try to move up, it can struggle without, okay, so there is no doubt it can struggle at the zone once again, because there were two consecutive rejections. It struggles at the zone, remains below the zone or around the zone even when the MACD and the stochastic RSI are bullish. In that case, this will indicate that the bullish momentum is not heavy. Because the bullish momentum is not heavy, so any more bullish movement might not happen. There may come an intraday breach of the zone, but I'm talking about the closing. Okay, a closing, because if you notice that on Thursday it moved up heavily. Within 1 hour it has gained more than 1%, and then in the next 2-3 hours it came down, it lost the entire 1%, and then it sustained. That is why I'm saying a breach can happen, but a sustained movement. Okay, I'm talking about the closing. A closing must be seen above the zone, then only it will be considered as in the bull side. Okay, then in the bull side there will be the 5827, and then the zone above the 5827. Yes, in between 571x, the zone which starts from 571x, and the 50% fib retracement level which is at 5827, there is one more heavy resistance. Okay, and this resistance is at 579x. Okay, so that will be there. So S&P 500, if manages to close above, gives two consecutive closings above the zone 571x, then it will moving to the 579x, not a problem. It will struggle, and for one day it will remain below or around 579x. Then for the other, then the next day, in next 1 or 2 days, it will be able to hit the 5827, the 50% of the fib retracement level. But again, the problem will happen, or the problem will be seen or considered only when, even with the help of MACD or the stochastic RSI, means the bullish sentiments, bullish momentum, okay, it try to move up and it struggles, here. Okay, it struggles here, the zone. Okay, and it either it closes inside the zone or below the zone. In that case, it will be considered as means that the market, that the bullish momentum is dull. There is dull bullish momentum. There is dull bullish momentum. What does this dull bullish momentum means? This dull bullish momentum means that S&P 500 will again and again, it will again and again try for 571x. Even if it comes down, then again next day it will try, then it will try. Okay, again and again it will try for 571x as long as MACD and stochastic RSI are in the bullish side and are in this, both are bullish. Okay, and supporting the bullish movement. This means that here in this case, for some time, for a week, maximum a week, or for 3 to 4 days, the market can enter into a very short term consolidation. Consolidation means that S&P 500 will now trade in between what? It will now trade in between the zone, upper side, and in the lower side you can say it will be either the 564x. If not, then it will be the 558x. That's it. It will trade in between these two or these three. Okay, for 4 or 5 days or for a week. That will be the consolidation. It won't move up and it won't give up either. But then what will happen? Then on one day, either the MACD will turn bearish or the stochastic RSI will turn bearish. When these two oppose each other, MACD and stochastic RSI, then there will be the fall. It will come out of the consolidation, and then there will be the fall. Fall means the continuation of this, the bearish movement, the second leg of the bearish cycle. Simple, very simple. In terms of the Dow Jones, okay, what we know is that the Dow Jones is, as of now, it is struggling at the very heavy level and the cluster of the moving averages. There is a level and then the cluster of the moving averages. So these three factors are creating very heavy resistance for the Dow Jones, and we have seen on Wednesday and Thursday that it has struggled and failed. Okay, not just Wednesday, Thursday, okay, but yesterday also, it means Friday also, it has struggled and failed. Okay, what does this mean? This means that when the S&P 500 will struggle at the zone, at the same time we need to see if the Dow Jones has given two consecutive closings above the cluster of the moving averages and the level. Okay, so if it does, if the Dow Jones does that, the level, simply the level is 42,000. It is actually the 42,015. This is the level. Okay, so 42,015 in the Dow Jones, that is the calculated level, and then the cluster of the moving averages. Once there comes two consecutive closings, okay, then it will help, then the Dow Jones will help the S&P 500 to breach and to move above and to sustain above and to close above, the most important part, and to close above the 571x. Once it closes above the 571x, even one closing will bring more bullish sentiments. Once again, let me remind you, okay, MACD and stochastic RSI must remain bullish no matter what. Okay, because see, let's consider a scenario wherein S&P 500 has closed above 571x, the zone which starts from 571x. Okay, but the MACD or the stochastic RSI, either of these have turned bearish. This means that now there is no bullish support. Even though it has closed above 571x, there is no bullish support and it can fail. So after 571x, we are anticipating a hit to 5827. Okay, this is there. But see, this the 5827 is based on these conditions. Number one, there comes two consecutive closings above the zone which starts from 571x. Number two, that the MACD and the stochastic RSI must remain bullish. These two conditions are there. If MACD and stochastic RSI fails to support this in a manner that, let's say, MACD is bullish but stochastic RSI turns bearish, this means that bullish momentum is gone. Okay, and it can fail even before hitting the 5827. Also, chances will remain good that it will hit, but still at or around 579x it can fail. Okay, before hitting the 5827, right? This is why very important. This means that if all goes well and there comes two consecutive closings in the Dow Jones above 42,015 and also above the cluster of the moving averages, it will be bullish. It will be supporting bullish movement in the S&P 500 in a manner that S&P 500 will be able to move up, will be able to sustain, and possibly it will be able to close above the zone which starts from 5x, from 571x. Okay, if all goes well, then this will be the scenario bullish side, and the consolidation is there. What about the bearish side? Well, the market is already bearish, the trend is already bearish on the daily chart. Okay, so it just need a little, a small, just a failure, and that's it. What kind of failure? A failure means that it moves up the zone which starts from 571x and gets a rejection, okay, so 1 2 on Wednesday, Thursday, then next week this rejection, market is already ready for the fall. In that case, even if the MACD and the stochastic RSI remains bullish, doesn't matter. Okay, the bearish side momentum will grow and it will then bring it down, and within a day the stochastic RSI will turn bearish, and then these two will oppose each other, MACD and stochastic RSI, and there will be no problem to this the fall. Now this time when it comes down, then it will be coming down to 53xx, okay, which is the 38.2% of the fib retracement level when it is calculated from the low which was seen in 2023 and the high on 19th of February 2025. But once again, for this fall to happen, the Dow Jones must support the fall, because see, if in this case, if the Dow Jones closes above, or if the Dow Jones continue to close above this, in this condition 43,000, this is the level, and the moving averages, the cluster of the moving averages, so Dow Jones is holding, sustaining, and S&P 500 is getting back to back rejections. Okay, then the fall will not be there, and whatever fall will be there, this fall will be limited. This fall will be limited to the 564x. 564x will be able to handle that fall. In this condition, when Dow Jones is holding, closing above this, and S&P 500 is getting rejections. Once the Dow Jones gives one closing, just one closing below the level and the cluster of the moving averages, and S&P 500 is already getting the back-to-back rejections, then continuation of the bearish movement fall. So at first, what it will have to do, that it will have to clear the 5,500 psychological mark. On 13th of March, the low was 5504.65, means 5505. It will have to breach, and then close above 5505 so that it can move towards 53xx. Okay, before that there are many levels, many good, very strong support levels. Those levels will help the S&P 500 to sustain. Okay, now there comes one more important part. Okay, regarding the movement. But guys, before that, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to participate in my S&P 500 knowledge transfer program, then the offer is applicable until March 25th, 2025, means Tuesday, this coming Tuesday. I have given the link to this Google spreadsheet in the description of the video and also in the comment section. You can open, my email address is there. However, if you are looking for the short-term solution, if you just want to learn the hacks, precise hacks, which works almost 100% accuracy with 100% of and works almost 100% of the time. Similarly, the options trading strategies and the premium calculator works with 100% accuracy with and almost 100% of the time. Then you can visit the shop section on my Patreon page. I have given the link in the description of the video and also in the comment section. Now, this important thing is in the Dow Jones. Okay. So how this important thing is going to, or this important that you must understand. Recently, what happened is that the Dow Jones closed below, when it was coming down, it closed below the low of this. Okay, this is the candle, and also the low of this, the candle. Okay, but now in last 3 days, Wednesday, Thursday, Friday, the Dow Jones has continuously closed above the low of this candle. Okay, this is the recent candle, and also this candle. Okay, these two candles. What does this mean? This means that the Dow Jones, other than the MACD, other than the bullish MACD and the bullish stochastic RSI, Dow Jones is also bullish through a condition wherein it has gained and has sustained consecutively for 3 days, okay, above the previous lows. This means that now, so I was saying 2 consecutive closings, okay, so that will like 100% confirm. But even if there comes one closing above, then that will also suffice. That will be like 80% confirmation that the Dow Jones is going to move up. Means even if the S&P 500 struggles at the zone, try to move up but fails at the zone, okay, but the Dow Jones will still be able to move up, and there will be a disconnect. This is what we call as the disconnect between the Dow Jones and the S&P 500, and this disconnect is seen not frequently, okay, but on very rare occasions we see the disconnect. But then what will happen? If the S&P 500 is seen struggling, it fails to move up to 5827, it is already struggling, okay, but the Dow Jones has moved up to its 50%, this is the level, okay, which is somewhere around 42,007 in 42,7xx. Okay, then what will happen? In that case, either Dow Jones will come down, okay, and sharply, it will come down sharply, or within a day S&P 500 will move up heavily. But in this case, chances of coming down in the Dow Jones are less, but the chances of getting a sharp bullish movement in the S&P 500 are more, especially in this disconnect. This means that the zone will define what will happen. So just like, see, last week in my weekly technical analysis, what have I mentioned? I mentioned 564x is the key. If it sustains, remains above 564x, then it will be moving towards 5827, but before it can move to 5827, it will have to clear the zone which starts from 571x. Otherwise, the bullish movement will remain restricted to 571x, the zone which starts from 571x. Okay. So similarly, so in the similar manner, I'm saying 571x zone. Okay, it has to recover and to sustain above 571x zone so that it can move towards the 5827. But in between, there will be 579x. Okay, if things doesn't go in favor of the market and Dow Jones fulfills its condition, Nasdaq fulfills its condition, and S&P 500 lags, S&P 500 lags in fulfilling its condition, then it might not be able to hit the 5827. And again, remember the bearish, if the stochastic RSI turns bearish or MACD turns bearish, any of these, or if both of these, then definitely a fall will be there. But guys, once again, okay, what we know is that the market has already entered into the correction and the recession. Correction was already there and also has entered into the recession. This is the beginning of the recession. So you need not to fear, okay, for this the recession. You just need to learn, you just need to understand how the market works, the working of the stock market, okay, through the technicals, through the candle patterns, through the special hacks and these things. So I have given the list to my programs in the description of the video and also in the comment section. So guys, once again, hit like if you have liked this video, and if you have any questions that you want to ask, then please feel free to ask your question through the comment section.